Welcome back. We were talking about COVID cases spiking. The Confederation of Indian Industry, the CII, as we know it, has told CNBC TV18 that they've called for the curtailment of economic activity without impacting critical and essential activities. Our colleague Shireen Bhan joins us now on the phone with all those details. Shireen.
Well, that's right. Given the fact that we're seeing this big surge across the country and not just in urban cities but across rural India as well, CII has basically written to the government saying that we should look at curtailing all non-essential economic activity, at least for a period of 2 to 3 weeks, but also made it clear that this should not impact critical activities like the transportation and so on and so forth. In fact, they've gone as far as to say that if you require to bring in the army to ensure that there is safe passage of oxygen tankers across the country, then so be it. They've also made other specific recommendations on distribution of vaccines and so on and so forth. But the important point here is that they are urging their own members to try and ensure that if you can work from home as much as possible. If you're not part of the essential services, for instance, NBFCs, banks, etc., do you really need to send out collection agents at this point in time? So those kind of measures will have to be taken by industry, but also telling government that, look, whether it is at a local level or at a district level or at a state level, or perhaps even at a national level, though they are not calling for a national lockdown the way that we saw last year. What they are saying is that there should be curtailment, which is why I use that word very carefully as opposed to using the word lockdown. So that's where things are, but you have to put it in context because remember, most states at this point in time are in some kind of lockdown, whether it is states like Delhi, Punjab, etc. Most states have curtailed non-essential services in any case. So we have to see, where this leads us. But this is the call from CII at this point in time.
Okay, all right. Thanks so much, Shireen, for joining in and filling us in with that quick update. Well, for the time being, let's get back to earnings then. And RPG Life Sciences, well, the numbers looked a little bit subdued. We're joined by Mr. Yugal Sikri, to give us some color on how was the past quarter and what's the outlook for the remainder of this year. Hi, Mr. Sikri. Thanks so much for joining in. Well, let's start off with COVID itself. Now, the second wave, you had told us the last time around that COVID-19, the initial part of it, had some impact on a particular segments of your business. I think your acute part of your business, it did have a bit of an impact. So what's the impact of the second wave? And secondly, what's your exposure in terms of business with regard to COVID-19?
Thanks so much for asking me to come over and speak on your channel. You talked about COVID. Yes, the COVID second wave has impacted us like any other pharma company. It is in terms of not as much on the supply side, but more on the demand side, because our business is in certain specialty segments, which means we have business in transplant, we have business in chemotherapies, we have business in dialysis. All of those are impacted due to COVID-19 second wave. Plus, the visit to the doctor's clinics has come down. The OPD clinics entries are being restricted. So all of these put together have an impact on the demand side. However, the supply side, so far so good because of the proactive measures which we took. We had the inventories kept for the API, for the excipients, and which is keeping our plant running. I'm happy to share with you our plants are operational to meet our demand. So not an issue on the supply side. The cash side continues to be good. Cash flows continue to be good. And very important part is the employee part. We are making sure that the vaccination drive has happened, the testing is happening, all the protective measures which are required in the plant, both in the API and formulations, are happening. So that is helping us to make sure that the supply side is intact. It's the demand side which has started getting a bit impacted. The customer coverages which we used to have, which we had actually reached up to the pre-COVID level, have started, I'm seeing the diminishing pattern largely because of the doctors' availability and the ability of the field force to reach out to the doctors. So
right. Take that point, Mr. Sikri. If you could give us a sense of your revenue itself, how much of it comes in the domestic business, how much of it comes from chronic, how much of it comes from acute, and globally, how much of it is US, how much of it is API, how much of it is rest of the world?
Okay. Just to give you a broad glimpse, close to about 2/3 or 60% of our business comes from domestic. 17% of the business has come from API, and 21% of our business has come from the international formulation business. Now, in the domestic formulation business, we have a preponderance of acute portfolio, but the emphasis in the last 2 years has been to move to chronic side and to move to the specialty side, and that's what has helped us. Despite the dependence on acute portfolio, we still registered a plus 8% growth in H2, and the year has ultimately ended with plus 5% growth in the revenue, and that's largely because of the measures taken, like entry into the specialty portfolio and also entry into the chronic portfolio. We have added 3 monoclonal antibodies, which is adalimumab, the bevacizumab, and rituximab, and that has helped us to register the positive growth which we have registered. Simultaneously, what we have done also is we are deepening our customer coverages in those customer segments. That has also helped us to keep our sales growth positive, and as well as the profit growth positive.
All right, Mr. Sikri, give us a few numbers then. For the year, what kind of growth are you looking at in terms of sales? What is the margin guidance that you're looking at? Earlier, you told us that in high teens is what you're expecting your margins to go to. And also, you spoke about new products. As a percentage of sales, how was it? I remember it used to be 7%, then it went to around 15%, then it was more than 20%. So, new launches as a percentage of sales, how much do you expect it to be in this year? That's FY22.
Okay. Yes, as I mentioned to you, all the names which I gave to you are the new products launched during the year. As percentage to sales, I expect that to go up. Compared to current base, I expect around 15 to 20% growth happening because of the new product itself. And the areas where we have to launch the new products, I have already indicated, which is chronic and the specialty segment. Going forward, and I must give you the perspective. In the last 3 years, you think our margins have moved from 4% to 11% to now 14%. These are my PBT margins which we have received, and they are largely because of the measure which I just described. One is the product mix, moving to the chronic and the specialty segment. Second is the OPEX reduction, and the third is the making sure that our manufacturing operations are also run efficiently, along with preventing the leakages which generally happen in pharma business because of the poor sales hygiene.
Just a quick word. You said your revenue growth for this year would be how much? Because FY21 you saw a close to 4% growth. In FY22, what is the number likely to be?
Yeah, I would retain what I've been mentioning earlier, that we will continue to grow our business higher than the market growth. That is something which is important for us. Just to give you a number, if the market is growing at, say, 10%, we will grow at 13-14%. If the market is growing at 8%, we should grow by 12 to 13%. It is largely also because of the market. And I'm sure, Nigel, you would have seen that the market has been behaving in a very yo-yo manner. In certain months, the market goes up positive, in certain months goes down.
Right.
It's all largely related to COVID.
Okay, Mr. Sikri, we take that point. Around 3 to 4 percentage points higher than what the market would grow is what you will aspire to grow. With that, we'll slip into a short break, come back and talk about the stock we were talking about just a few moments ago. Marico, that's the one up 9% in an otherwise weak market. More details when we return.